Thank you very much, and thank you to those of you who are still here for what I was jokingly explaining to the panel was going to be the graveyard shift of the day, and actually I was right, it really is. But actually, it gives me great heart to see that in pretty much every single panel, every single discussion, every single keynote speech, somebody is talking about data and technology, automation, and the topic that I am very personally extremely passionate about. I've been working in this part of the industry for a very long time, well over 30 years, so I guess I must enjoy it. I'm going to let my panelists and my lovely friend and co-moderator Abena introduce themselves, because they'll be much better at it than me. But as Brian says, I've been with ICMA for just over 2 years. This is my second AGM, so I've only done 2 of the 56. I wonder how many more there will be, but we shall see. But Abena, I'll let you introduce yourself.
Thank you, and good afternoon to everyone, and thank you very much for staying with us. My name is Abena. I'm the CEO of the Ghana Stock Exchange. At the exchange, we run both the fixed income market as well as equities markets. The market capitalization for our markets is in excess of $30 billion. It's mostly government securities focused, but we are working on including more private sector, which currently comprises about 15% of the market. We also jointly own a CSD, a depository with the Bank of Ghana, and I'm here proudly with a big delegation from West Africa, and it's really an honor to be here with all of you today.
Thank you, Abena. Should we go in order? Michael.
Yeah. I'm Michael Cyrus. I'm heading up Collateral Trading and FX at DekaBank. And in 2017, I started a blockchain initiative at Deka, which also led to the creation of our first startup, Swired, which focuses on enabling and wholesale banking settlement standard for digital assets.
Thank you. Christoph hardly needs any introduction, but yes, Christoph.
Georgina, many thanks for having me here. Christoph Hock, I'm responsible for tokenization and digital assets at Union Investment. Actually a kind of new old role. So my previous role at Union was setting up and running our multi-asset trading desk. And actually for the last 5 years, we got more and more involved in blockchain, DLT technology, tokenized assets, tokenized bonds. And yeah, that's my
and a little bit about your role with us, maybe, at ICMA, because you have another job that we don't pay you for. Yes. So we're very grateful.
That's a very good point, Georgina. 2 hats on. Innovation, tokenization, digital assets, also a key topic for you at ICMA. And I have the honor, together with you, together with Gabriel, being chair of our DLT bond working group.
Thank you, Christoph. Yes. For that. Thank you. Karsten.
Thank you for having me here. Being the boring central bank guy with next to no knowledge to technology, dealing with the markets department there, and this is the section where we are on the operating side of implementing monetary policy, and in that respect we have a direct link with many banks that are now trying to check out if there is any eligibility for their securities to be accepted within our framework, so that they can use it for refinancing with central bank money. And the other link that we might talk today about is that currently, especially the Eurosystem, but also Bundesbank is quite involved in the CBDC side, and they're not only on the retail but also on the wholesale side.
Thank you, Karsten, and definitely last but not least, Richard.
Hey, thank you. Yeah, Richard Young from the data business at Bloomberg. I look after things like reference data and relationship with standards bodies, and we cover also issuance of things like LEIs, the FIGI code, which people may know on the Bloomberg system and beyond. But basically all things identifiers, and of course digital is coming into that frame as well. Prior to Bloomberg, I was many years with SWIFT, so I was quite interested in hearing the presentation, the last but one. Anyway, that's me.
Thank you, Richard. So before we start, you can see, hopefully, in a minute on the screen, it was there a minute ago, we're running a poll. We're running 2 polls, actually, because we're digital like that. Unfortunately, you can only select one answer for each, which we will improve upon next year. But also there's a section on the app for Q&A, which I'm sure you're aware of. If you do want to ask the panel a question, please do. It makes it much more interactive, and we will try and leave time at the end for that. So Abena and I are going to try and seamlessly co-moderate this panel. I don't know how that will go. But I'm going to kick us off with a general question to all of you about the knowledge and understanding of senior management around the topics that we are going to talk about today: AI, CBDC, DLT, digital bonds, digital assets, whichever language you want to use. It feels to me as if there's been a bit of a sea change, actually, even since last year when I moderated another panel on not dissimilar topics. Maybe from an area of interest and sort of self-education to more of a necessity around these topics. But I would love to hear your perspectives really on where you think that has moved in terms of senior management's knowledge and understanding and the necessity for them to be involved in the discussion. So shall we start with Karsten?
Thank you, Georgina. I have a very clear view on that. If we look also on all events we had here around technology, it's something that does not necessarily stem from our space, the innovation part there, despite the fact that we all would claim that we are very innovative in our respective fields. Somehow innovation is more linked to the Silicon Valley type of thing. So what's happening here is we do see that senior management is very good in optimizing an already functioning ecosystem of financial markets, and in looking especially, and I liked very much the talk about Swift there, how to glue things together, but also how to make it secure. And innovation in itself, from management perspective, is not necessarily the, let's say, and especially as a central banker, not necessarily the most secure stage you're feeling happy with in the beginning of the development, and we had that speech earlier. So management tends to wait for a ripe technology or for a nice sandbox where nothing can happen. And I think we are currently in between the sandbox stage and the hope for rolling it out, despite the fact that the old world is still working fine.
Yep. Yeah, an interesting point. Michael, do you want to add some thoughts to that?
Well, I think when we started at the time with blockchain, people said, that's a nice idea, but you know that won't work, right? But they gave us the breathing space to explore the topic nonetheless. And in the end, we had a little bit a coalition of willing people, something like 30 or 40 people who voluntarily contributed to the project. And then it became a project. We did our first transactions, and then somebody from a local newspaper in Frankfurt came to me and said, okay, Michael, do you want to give me an interview about this? I said, yes. And then actually I had an interview, and this was actually kind of a situation when people in management saw, okay, there is something real. Yeah, so this is not just a couple of people spending their spare time and trying to solve something that nobody needs. It is obviously something which is bigger than that. And since then, we actually had a lot of management attention. And eventually, I think, I'm not sure that Deka ever has created a startup on its own, but it did in this case, and this also underlines that by now we actually have changed from a very conservative, probably also very skeptical institution to an institution that is really believing in AI, but also in blockchain and digital assets, and is really investing into this topic.
Great, yes, exactly. Thank you very much. Christoph, our resident expert on digital assets, but what's your perspective from Union Investor more broadly?
Yeah, having the buy-in from senior, from top management, obviously is key to get all the resources, to get the budget, allowing us to further develop, evolve in the topic of blockchain, DLT. I guess it's important also to look from a bigger picture when having a holistic view on blockchain. So we hosted most recently an event, internal event, and one of the keynote speakers started with the question, what's the biggest mistake companies did in history? And her answer was not to question existing processes, to believe things they stay as they are when they work. And we've seen it so often in the past. Just look at Kodak as a key example in the photography industry. Nokia, once Europe's largest company with a market cap north of 200 billion. Remember the CFO back in 2009 in a kind of arrogant statement, he was giving a laugh at Apple, saying, I'm happy that these guys stay in their niche, and 2 years later the company was dead. And it's really important to take evolution, or maybe you want to call it revolution, to take it serious. And coming back to your original question, I think it's a key role of senior management not only assure that resources are given internally to a group of experts, but also guaranteeing readiness of the breadth of the employees, that they are ready to cope with this new technology. And again, looking from a big picture perspective, digital bonds, what might be seen from some as a kind of bottom-up driven topic, it's a bigger part of token economy. And token economy equals Web 3.0. So we've had the internet in the 90s, where everyone was giving a laugh about why do I need email, why do I need the internet, it takes me ages to get the pipes, why are my modem up and running, connectivity was disrupted, was interrupted so often. Looking at Web 2.0, platform technology, social media, exactly the same. Who was not questioning, why do we need Amazon? I can purchase my books in the bookstore around the corner.
Yep.
Why do I need Facebook? When Facebook was IPO'd, the stock went down 25% immediately because everyone was asking what's in their business model, how will they monetize? And looking at this technology, and AI goes hand in hand with blockchain, DLT, and with data. It's key of the next steps we are heading to, and that's why sense of urgency from a top management level is really key, but also creating sense of urgency with all the employees of your individual firms is also highly required.
Leading by example, always the way for change, ideally. Richard.
Well, yeah, I mean, these topics of AI and the digital assets is certainly becoming a big priority for Bloomberg. I mean, AI actually is something we've kind of done for a long time, and AI is actually not massively new. What's kind of changing is the technology and the data sets to make it more powerful. And so, you know, it's data driven, and obviously that's where we come from. So that certainly got a lot of attention, and you know, we see AI as being both a great opportunity for us to offer more to our clients, but also a great opportunity for the capital markets to hopefully not to go to the dystopia we had a couple of presentations ago, but to actually be more transparent and better functioning. You know, if you do it right, if you've got the right data and the technology applied correctly, then I think that's a great opportunity, not just for providers like us, but for the whole market. And then on the sort of digital assets piece, I mean, obviously, you know, we're going to focus here particularly on digital bonds, given it's the ICMA conference. I mean, that's something, digital bonds, something we've been tracking for quite some time. Obviously, as we already probably know from the conversations we've had already this week, it's still a bit nascent in terms of the sort of number and frequency of these, but they are increasing. I mean, we have a tracker, a search tracker on the Bloomberg terminal, which allows you to sort of pick out digital bonds with digital sort of attributes, if you like, and that is basically if they are tokenized, or if they're on a digital exchange, or with a digital clearer. You know, if they've got those sort of attributes, then we would classify them as digital bonds. There's only, in terms of active bonds at the moment on that list, 32. So, and that includes the Hong Kong ones that were issued earlier this year, which I know have attracted quite a bit of attention, and I'll come back to those a little bit perhaps later. But you know, so it's kind of small, but it's going to be important. Of course it is. So, you know, that's why we're developing that service to give people more information about those sort of issuances as they start to occur more frequently.
Thank you, Richard. Thank you very much. So a little bit of a dive into digital bonds, I think, since that's such a hot topic and you know, the one of the subjects that we are here to talk about today. Christoph, obviously, leading our digital assets work at ICMA, or sponsoring it, should I say, leading it with us. Can we touch on the economic sort of ecosystems that are evolving around the world? It's been brought up a bit in various panels, but it still feels as if there's quite a bit that needs to happen in order for this ecosystem in its entirety to fly. Maybe the idea actually is that it grows organically, and that's fine, and it can grow in different, you know, jurisdictions, because obviously we need to consider the legal and regulatory frameworks in which that's operating. But just a few perspectives from you on what you think is missing, what's going to make it move. It feels to me as if it's already moved since last year, and it's moving every year, but some will say it's too slow, it's been around forever, it's never going to get going. So what's your perspective on that?
So it's quite obvious, Georgina, the kind of chat GPT moment, so to say.
I didn't use it for the question, but I could have.
Blockchain DLT, we haven't had it so far. But on the other hand, I guess we are getting out of the stage where we've had a number of POCs, proof of concepts in the past, to a more kind of standardization, which is clearly required. And at ICMA, you're doing a fantastic job. You've set up various standards which were used already in the past when it came to digital bonds. And I think it's important to get all the relevant stakeholders together, really to build the new ecosystem. So the education and collaboration, from my perspective, are key right now. We've had last week another conference in London where also one of the key messages was it's not about competition at the moment. So you don't want to have bank A, B, C, D sitting in their silos, building an infrastructure, having then asset manager A, B, C, D doing exactly the same. And you must bring all the forces, so to say, together. We need central banks because it's not only assets on chain we are talking about. To have really all the synergies, we need also cash on chain. Yeah. And the exploration phase in the ECB started now, also with the Bundesbank taking a leading role 2 weeks ago to create, hopefully at one stage pretty soon, wholesale central bank money. Is really a key catalyst. Coming to your original question, what is missing in the ecosystem? I guess we have here in Europe, we've had lots of discussion about capital markets union, and we have here in Europe exactly all the kind of ingredients you need to make really benefit of this environment we are living in right now. I guess number of technology topics sorry to say, but we lost it out to the Americas. Look at 25 years ago, technology companies, Silicon Valley, where the big companies set up, not here in Europe. You have even the situation that big IPOs of European companies, they take place at NYSE, at NASDAQ, but not here in Europe. Looking at AI, I guess US, it's fair to say they also have a competitive edge right now, but looking at blockchain tokenization, we have a fantastic regulation, which is required, which is also required in the very best interest of our investors. Karsten was alluding to the fact we have a functioning ecosystem. Yeah. And it's functioning because we have the regulatory gates, and keeping the trust of our clients, keeping the trust of our investors is also key when getting to the next stage on DLT blockchain. And therefore, strong collaboration, central banks, regulators, Ministry of Finance, buy side, sell side, groups like ICMA is really key. And then asset. We have wholesale central bank money, hopefully coming soon around the corner. We have tradability on secondary markets, ELT pilot regime, and digital security sandbox in the UK. Here as the key words to mention. We have MiCA from a reg perspective kicking in the second half. So we just need to bring the horsepower onto the street now and to collaborate to make this a success story for Europe finally.
Thank you very much. And just before we move on to the perfect segue into CBDCs, which we'll come to next, Michael, I was just going to ask you a slightly different but related question. Do you think this is a new asset class? Is it an additional asset class? Is it an evolution of the current? Will it ever replace the traditional industry?
Yeah,
I never told you I was going to ask you that question, but I just threw it at you anyway.
No, that's a pretty good question. Yeah, I think in some of our markets we actually have already relatively high efficiency. In some of our markets, you can settle in T0. In many aspects, when people talk about blockchain, one of the arguments is if you have blockchain, there are no settlement fails.
Yeah.
In some of our markets, we have 97 or 100% settlement efficiency. And we actually do trading in milliseconds in some of these. So the bar is already relatively high. And this is, I think, why in many markets you also find that people are experimenting with blockchain. But at the moment, beating the standard is something which is not that straightforward. And this is also why we at Deka, for instance, we focus a little bit on Schuldscheindarlehen, Namensschuldverschreibung, so private placements, because in the area of private placements, you can introduce to people a blockchain. But actually it is much more, because what you're also introducing on the back of it is complete digitalization. So people do certain processes which they have done in a very physical way, exchanging faxes, grabbing the phone. We actually have instances where people lost the certificates. So you can't lose a certificate in the digital world, obviously. We even have mundane problems like people don't have the right certificate paper, because it has to be on a specific paper. So, and then you have to order the paper and you get it in 2 weeks' time. And you have all these kind of issues, and the same actually applies for trustees, for instance. If you have certain transactions, you need a trustee. But the trustee usually has to come to your office. So in some of these instances, he has to travel 150 or 200 kilometers to make his signatures. So all this actually in particular markets slows down the trade efficiencies, and that is something where we pair blockchain with digitalization, and we solve a couple of very real world problems. And this is something where immediately people are saying, okay, now that is a structure which definitely makes sense. And it happens to be on a blockchain. And I think this is also important because, I mean, nobody, when you're using the internet, people don't care for the programming language, right? It's not, and nobody is able, or probably a couple of people here are able to code C++ or HTML or whatever, but actually you're also not interested in that. And people, if you ask the end user, he's not interested whether this is on blockchain or not. He just wants to have certain benefit, which ideally is better than the standard that they're using today. And that is a difficult task. And this is, I think, why it takes us probably a little bit more time than people envisaged at the very beginning that it would take.
The transformational element. Abena.
Yes. Thank you. Thank you. I think the discussions have been really interesting. But coming to you, Karsten, our regulator, our central bank person in the room, you've been in the sandbox stage. The market is asking when next? What's the next move for CBDCs? We've seen globally a few CBDCs being launched, mostly in the emerging market areas, Nigeria, China, Jamaica. Last week, I got my Ghana CBDC card. The ECD launched, and I was able to make transactions with it. So we want to hear from you what banks like the Bundesbank and other European central banks doing. When is the next phase? When are we seeing CBDCs on the market to facilitate transactions?
I think it's interesting talking about this type of revolutionary product for a central bank, to see that it took already the first discussions about this are very old, in fact, when it will come. And already at that time, around the 2000s, we had some expectations on the market side, at least, on how to proceed there. Technology was there, by the way, but not well known. And it took those some years now to come up with something. Now in a much more complex setup and a very challenging debate, which is, by the way, not only technology, but it's also, if you look closer to the parliamentary discussions in the European Parliament, but also to Sweden, you have all those interaction also about what is the Parliament saying about this type of currency issued. And so in that context, apart from the discussions we had, it's difficult to foresee when exactly it will be launched. Mm-hmm. I think a crucial step is now taken, and we have to discern those two elements of retail and wholesale, not to mix it up too much. I would argue the retail part is really now, there's a strong commitment of, at least in the European zone, in the Eurozone, of the Governing Council of going live at some stage in the 20s. And so that might be clear, but in that case, many of the discussions we had around this conference and we just heard about are not linked to that type of retail CBDC, but they are linked to the wholesale question. And there, the first, I think, very important step that was mentioned is now taken. It's exactly the dialogue with the industry and the approach of trying out, of experimenting in multiple dimensions. So we have more or less 3 different patterns around the Eurozone where we do try to link it with so let's say the central bank money world with the financial assets, clearing and settlement. And that will be certainly, especially on the DLT side, that will be something like the Bundesbank has this so-called trigger solution, which is, in fact, you can say it's already there in the sandbox, and it's not there from, let's say, yesterday, but for some time. But the question still is how to exactly implement it and now to play around with it. So difficult to say when it comes, but at least we are having those discussions. And perhaps just to mention it, completely different to the AI part or the ChatGPT world. It's not that type of disruptionary moment, but it's linking some things together that might create a new business chances or efficiency reasonings that are not yet there and heavily asked for, but it opens up a new world when you link the payment to the cash side to the product side.
Brilliant. Thank you very much, Karsten. Very interesting. I'm going to, I know you're a moderator, but I'm going to ask you a question, if that's all right, Abena. I did warn you about this one, so a bit kinder than I was to Michael. But just turning to the emerging markets a little bit, thinking more broadly about the digital world. One of the debates we were having, and I'd love to get your perspective, is there an opportunity for some of the emerging markets where it's slightly more greenfield and we don't have quite so much legacy infrastructure maybe to get around, replace, spread over the top or whatever. Is there an opportunity for them to leapfrog the developed markets, do you think, in some way from a digital economy perspective?
Yeah, I think, and that's a great question, Georgina. I think there are serious advantages for sometimes being late in development. What we are seeing in emerging markets is more adoption of digital solutions today. We've seen that in our financial services industry where, thanks to KYC requirements, Basel requirements, etc., we were able to leapfrog using digital means. As I said, I just experienced last week my first transactions using a CBDC that was issued to me by my central bank, Bank of Ghana, in transacting with vendors in Ghana. So we're seeing a lot of these solutions coming up. I can tell the story of another financial services provider who using what we call mobile money or our wallets on our phone has been able to just issue their 6 millionth loan, small loan to SMEs using AI, using a robo-advisor and my normal transactions done on my cell phone to determine my credit worthiness. Try getting a loan from a bank and filling all these documents, but using artificial intelligence, they are able to disburse very quickly, understand credit patterns, undertake different credit assessments, and issue millions and millions of life-changing loans to people. So yes, AI adoption is happening in Kenya. The first set of robo-advisors have been licensed by the Securities and Exchange Commission, so that even a service that was very expensive for the average person to access or didn't know where to access, through an app, they can have their investment profile done, they can be advised what sort of investments they should make. So for us in the emerging markets, I think not having the plumbing of hundreds of years old, the powerful lobbies of advisors and lawyers and investment bankers, not having that as developed, has helped some of our adoption of digital solutions move further. And I think this trend that we are seeing is going to go further. So maybe this is something Europe can learn from us. We can be the training grounds or the experimentation grounds for these to take further action.
Great, Abena, thank you. What a great answer. Thank you very much indeed. Right, I'm very mindful of the clock, not least because two of my panellists have to make a train and we've now cut them horribly tight for when to get back to the station, so we will finish on time, you'll be thrilled to hear. But just a couple of other topics. I mean, maybe you want to talk to Richard.
Yes, Richard. I mean, this wouldn't be a conference, a proper discussion without talking about the standards, data standards. And here I really want to talk about the bond data taxonomy and the work ICMA is doing to include digital bonds here and the common domain model, etc. But really from your perspective as a data provider, why is it so important for standards to be had for these assets to grow?
Thank you for the question. I mean, it is, well, standards are important anyway, because if you don't have them, then the data can be maybe misinterpreted. So standards are core to good data. And also, I picked up yesterday that data is the lifeblood of capital markets. Someone said that, which was very reassuring to me as a data provider. But that data does have to be standardized where that makes sense. And obviously, when there's something new happening like digital assets, then that perhaps means that things have got to change. The data model might need to expand or be altered in some way. And certainly in terms of what we're doing in Bloomberg, we're looking at how we need to change our data model to make sure that we cover the information people would need for digital bonds. That's maybe different to what they expect to consume now for a conventional bond. And that's where some of the work that sort of ICMA has been doing with the bond data taxonomy is very useful. I mean, that's a general taxonomy which basically provides consistent terminology and interpretation for data attributes for bond issuance and the life cycle of those bonds. But then there's also been an extra bit added on, which is looking at basically the extra requirements in terms of data for a digital bond. So I mean that includes fields like the DOT type, whether the ledger's public, private, permissioned, the platform it's been issued on, things like that, which are partly technical, but would affect potentially the accessibility of that bond. So we're looking at where we need to change what we do to to include some more of that sort of information. Also key is identifiers. I mean, obviously within bonds, we're used to ISINs and Bloomberg issues figures, which also identify bonds, and those are still very appropriate and will be used and are used already in the digital bond standard set. But there's a new standard which ISO has been issuing now for a couple of years, which is the digital token identifier, the DTI. So that kind of sits alongside conventional identifiers like FIGI and ISIN, and provides a more technical description of the token. And then obviously the business attributes would be identified in the sort of conventional way. So you may need to sort of accommodate a sort of portfolio of identifiers to give you a complete picture of this new digital asset, this digital bond that you may be interested in acquiring or whatever. So yeah, these sort of initiatives around standards are key to making sure that the data requirements, the new data requirements coming out of this exciting world of digital assets works for everybody, and people have certainty in terms of what they're trading and what they're investing in.
Thank you, Richard. And I think the work ICMA is doing, we're looking forward to engaging in more and more of that and more standards on that. But having talked about all this transformation, I mean, here we are, people in the room. Are we extinct? What's going to happen to all of us, the non-machines? I want to hear the panelists' views. What is our role with all this transformation, this digitalization that's going on? And I think I'll start with you, Michael.
Well, I recently had a discussion with our head of quantitative strategies, and I asked him a similar question, and he said people must have a very poor self-esteem if they think that artificial intelligence could make them redundant. And I think there's some truth in it. At the moment, what we are seeing is some form of what people would probably call weak artificial intelligence, and that is kind of a helper intelligence. So what we are using, for instance, AI at the moment for is parsing emails and chats. So when people are asking us for certain securities, then it's always like, hi, how are you? What are you doing? How was the beer and the party? And by the way, I need a certain security. And then the AI will just take out the relevant information, copy that into our trading system. Then the trading system would look, okay, do we have the right securities for securities lending, and then make a trade proposal. Now, that actually is helping the trader to do all kinds of transactions, which probably a couple of years ago we wouldn't have liked to do, because very often the size of some of these securities that you're looking for actually doesn't really beat the cost. Now, if you actually do this in an AI environment, you get much further down the road. So and I think we also did the same in asset management when people are asking specific questions regarding the fund performance, tax, and other questions. We actually had many people sitting there just sorting these emails, and we are now employing some of this AI to do this in a quicker way. And let's face it, we're still a company that is growing in terms of the employees that we are needing. So AI doesn't really seem to make all these people redundant. It's at the moment somehow the opposite. There are more people actually working for Deka doing all kinds of other stuff. But AI is certainly something that has the potential to lower the cost in some areas of the financial markets, where currently it's probably also fair to say that cost for many decades had only known one direction, up. And we are probably now seeing that we can use AI and some of these, or these weaker form AI, in order to reduce fixed cost of running our business. So that, I think, is a good thing.
Thank you, Michael. Unfortunately, it doesn't mean more time at the beach for more of us, but we'll take it, not yet.
It's interesting on the poll, Abena, that I just had a quick look, and on the transformational impact on the capital markets question, AI is well ahead at 52%, 36.4% digital assets and DLT. Never mind, Christoph, we can still work on that. And 11.7% on CBDCs, which is definitely still in the running, but interesting from the audience. Thank you for that, and thank you for our one question on the Q&A, which was also on AI. So I think we've touched on most of that already. In the second, go on, sorry.
Georgina, looking at the results of your poll, I think it's important to see all these topics. They will go hand in hand.
Yeah.
So you can't see AI in an isolated way, blockchain DLT in an isolated way, data in an isolated way.
True.
The one is extremely connected to the other one. We need digital assets, we need CBDC, we need AI. And an important topic which is missing is the ESG part, which is also highly relevant when talking about blockchain DLT, because going forward via DLT blockchain, you can measure carbon footprint. So it will be also a game changer for ESG.
Yeah,
and of course you did have digital green bonds issued in
Hong Kong, using the bond data taxonomy.
Yep.
Yes, so thank you very much. We are literally 7 seconds off time, so well done, everybody. We almost covered all the topics we wanted to cover. Thank you so much again for attending the conference and AGM and listening to our panel, and hopefully you've had so much talk about automation and digitalisation. You'll all be as big a fan as I am of the topic, but thank you, Abena, for co-moderating with me. Thank you, panellists.
Thank you.
Good luck with your trains. Thank you.